Welcome to the Telltales Podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit C has been updated to include both the IEA and OPEC numbers and our own Department of Energy. And there's very little change in 24, and there now is a 25 forecast. I think that there's still, as you can see with the surplus capacity, there's still surplus capacity, but a little less based on 25. The demand increase is, 1.8 million barrels. IEA in later years, that's for an organization of consumer countries, has much lower demand than OPEC is predicting. But for 24 and 25, everyone's pretty well lined up. So I think Exhibit C is pretty well updated now. One thing that's interesting, I just want to touch on, is that when you see estimates of how much oil we use, it's always around 100 million barrels. In 24's case, 102.9 million barrels. But as you can see from the supply, if you have Exhibit C in front of you, other liquids in 24 is 29 million barrels. Now, other liquids are NGLs, condensates, whatnot, not necessarily things you can make gasoline or jet fuel or diesel out of. So the real number of crude in the world is around 75 million barrels, but everyone talks 100, and this chart is 100. Exhibit B, which is natural gas, doesn't really change. You'll see the near month, that the August, is down to 230. What's happening here is that there's too much gas in storage, and people are worried that in the August contract or the September contract, no one will want to hold the contract because you won't be able to take physical delivery and put it in storage because there won't be any storage left. So the months starting in November, December, and next year and the year after, all have held up pretty well. But those near months now are really low. That has held power. We've had warm weather all over it. So it always seems to be warm in Texas and other parts of the Southwest. But we have had significant warm weather in the Midwest and the East, and it hasn't made too much difference in power prices. I think power prices are being held down because gas prices are so cheap. To give you an example, Henry Hub is, like 230 or something last Thursday. I think on the same day, the Chicago City Gate price was like $2. Normally, the Chicago City Gate price should trade, at least 40 cents more than Henry Hub because it takes that much cost to get the gas to Chicago. So I think the best we can say on the gas market is this hot weather will help run the stored surplus down, and things should be better next year. Exhibit A has been recast. The CBO, that's the Congressional Budget Office forecast. The good question here is, what about these headings? 20 and 21 are labeled COVID. CBO forecast is 22, 23, 24, and 25. A good question is, why are 22 and 23 considered to be forecast? To tell you the truth, I marked it this way and I've left it because I've become convinced that even pretty experienced economists in looking at our public revenue and estimates of expenses are, these are estimates. I mean, maybe I ought to say CBO estimates rather than CBO forecast. And for example, there's some things that are apparently inexplicable, and I'll try to spend some more time on it, but look at individual income tax in 23. Was it really off that much from 22? When you look at 24, it's kind of more in line. Another item of expense that is kind of inexplicable, lining them up one against the other, is Medicare. Is Medicare really going to go down from 980 million to 830 million in 23? Or are some costs somehow being allocated to Medicaid? So more work needed on that. But I think I've become, I think the overall pattern is good here. I think this is a good thing to keep track of, but the viability or the accuracy of these estimates is a bit of a question mark. I think one of the things you see here is that if we could just get that all other category, which was 910 million in the year before COVID, down to like $1.2 trillion rather than $1.4 trillion. If we could just save 200 million by doing that, we would at least flatline our deficit in the $1.4 trillion range, and we would start to gain a little bit. What is gaining? It's U.S., when you look at economists, U.S. federal debt held by the public as a percentage of GNP. And for example, 24 GNP is estimated to be 27.5 trillion, and our U.S. federal debt held by the public 27.8. It would be terrific if we could somehow, with whichever administration is in charge after Inauguration Day in January 25, if they could eliminate enough of that all other spending to start to have that ratio improve. That would be terrific. And we have a lot of other problems, but that would be good. Why don't we do healthcare first? And if we turn over, going from back to front, I did add Harrow to page 20. Now, Harrow is a healthcare company that we discussed last week, and that's much smaller. You can see the 140 M, so it's 140 million, where all the other numbers are in billions of dollars. It does seem to have a bit of free cash flow. It trades times that free cash flow for like 100 times free cash flow. Its 3-month report to March, its revenues were up $8 million. So certainly its cash flow doesn't look as good as Vertex or Lantheus or whatnot. But Jason, any other comments on Harrow? I think Mike and Jason are a little spooked bringing it up in these weekly phone meetings because they bought it, and it's gone up quite a lot since they bought it in a short period of time. But with that caution, anything else on Harrow this week, Jason?
Yeah, I would say we're expecting the free cash flow to increase significantly in the future. So the company is really 1 year into a 5-year strategic plan where they've acquired a group of drug assets that they are commercializing. The first one was brought to market just over a year ago. And they have 3 big drugs that 2 of them they're bringing to market, 1 they're bringing back to market. So they've really ramped their sales and marketing spend. You'll see in the SG&A line, and anticipating increased sales of not just those 3, but their whole portfolio of drugs. And they're like an ocular anesthetic, treatment for dry eye disease, and then an anti-inflammatory injectable drug for the eye. So they really see those 3 markets as large. They are large markets, and growing sales in those markets pretty rapidly. Their 5-year goal is to hit $1 billion in sales. So their trailing 12 months you'll see is the 140 million. That puts it at a mid-40s compound growth rate. And just perspective, last quarter they did a 44% growth rate. So they'd have to keep that pace going. But like I said, they've ramped their sales and marketing, and they're really early stage on commercialization of these drug assets.
Our kind of view is that this thing actually maybe I'm going to put words in Jason's mouth here, but if everything goes according to plan, which they never do, but you want to think about what the maximal upside on this probably is. If they do hit that $1 billion in sales, you're probably talking close to a $10 billion market cap. So that's about a 10x from where it is today. Where, you need to be careful with these things because the wheels can fall off. So we're certainly watching it with a lot of hope because we're very happy with the path the management team is on. We've been generally happy with their capital allocation decisions. So I think this is a great company to watch, and I think it's good that we've got it in the 20 pagers now.
We did take out Etsy. Etsy's a good company, but I kind of came to the conclusion that we have about 80 companies, and when we add one, we ought to take off one rather than wind up with 100 companies. From the very small to the very large, but still with pretty significant sales growth. If we turn to page 19, the fourth company on page 19 is Lilly. We talked about the Lilly in prior Wednesdays. It's near an all-time stock price high. It does have almost $8 billion of free cash flow, and its sales are going up by 20% a year. It's really quite an achievement as compared to, other large pharmaceutical companies. Lilly is really, I'll defer to Jason, but it seems to me Lilly's outperforming everyone else in the field of, sizable pharmaceutical companies.
Yeah, they have two big hits recently with the potential treatment for Alzheimer's and then the GLP-1 drugs. And they've been pretty aggressive in acquiring small startups, doing research on GLP-1s and other GLP drugs in that field. But a word of caution would be their sales have ramped dramatically based on sales on Wegovy, but there's a host of now pill form versions of these drugs that are coming through late stage trials. So Roche and Pfizer both have some. I think there's going to be a lot more competition here, and right now they're enjoying a really high markup on these drugs that can't possibly last forever.
Yeah, the patent cliffs are imminent, and even the analysts' expectations for future revenue growth don't line up with the valuation. So,
we turn it to page 15, staying on healthcare. We've discussed Vertex quite a lot. Any news on Vertex?
They licensed some early stage gene therapy research from a Korean biotech. It's a pretty small deal, but it'll be interesting to see where they take that. There wasn't a lot of details out around it, but something that occurred in the past week.
All right. And then we covered last week, Lantheus had a great last 10 days or so. Why don't you just go through that detail for anyone who may not have heard it last week, Jason?
Yeah, and there is some newer news as well, but about 20% of Lantheus's revenue was at risk at the end of this year if CMS didn't authorize pass-through billing for their PYLARIFY diagnostic. So today, a hospital will screen a man for prostate cancer, run the PYLARIFY diagnostic, and bill it through the PET scan, the billing code for PET scans. And that was going to expire at the end of this year, and there wasn't a clear path to how they would get reimbursed, and that's about a 20% of the scans that are conducted. So what CMS did was put out draft guidance that they're going to allow radio diagnostics to be billed independently going forward in the future. So the risk around that 20% of their sales was taken away. They're going to have a way to bill it in the future, a better way to bill it, in fact. And then the new update that they announced this week is they acquired another diagnostic so that they had one diagnostic for imaging tau protein tangles within the brain. They acquired a company that has a diagnostic to image the amyloid plaque buildup within the brain. And what's interesting is both of those, neither are FDA approved. They're still in phase 3 study, but both of them are being used in Leqembi. So this is Biogen's Alzheimer treatment. They're used in the follow-on study for Leqembi. So they're imaging healthy adults in that they don't have symptoms of Alzheimer's, but they do have either amyloid plaque or tau protein build up in their brain. And they're studying whether Leqembi will prevent that patient from developing Alzheimer's symptoms. So it's kind of interesting that, maybe that's how these two companies came together. They're both part of this large scale clinical trial. And in theory, hopefully Biogen picked the two most promising diagnostics to include in their study. And then there's, not just that, both being used to diagnose Alzheimer's. The new one they just acquired uses a fluorine isotope, which is the same isotope used in Pylarify. So Lantheus will already have the radiopharmaceutical manufacturing and distribution network set up across the country to roll it out. So there's a lot of overlap there.
I'd also add the big picture with the CMS rule change is that it's a net positive for radiopharmaceuticals in general, and Lantheus is establishing itself as sort of a leader in that space. So you think about pathways for the startup companies to get acquired. Lantheus is quickly becoming, at least having some level of advantage there because of their existing network. Okay, let's take a quick break for a message from Oak Cliff Sailing.
Hi everyone, it's Ali again. Last time you guys saw me, I was on board OC86 in preparation for Bermuda, which we came in finishing 4th. Directly after that, I flew to Massachusetts to compete in the Rose Cup, the U.S. Youth Match Racing Championship. And immediately after that, I went back over to Oak Cliff and raced at the World Match Racing Tour Academy, as well as competing in the Triple Crown. Straight after that, grade 4, we drove here and got to Chicago, put our OC68, which I'm on board right now, into the water, put the mast up, and then delivered it over here, which was a first for all of us, but we're so excited to be on this new boat and learn more with each other. Coming up for this race, we'll be competing in the Chicago Mac race, and then we'll also be competing in the Baby Mac, which Dawn will be driving, and it's going to be her 60th birthday. And for this year, she doesn't want a cake for her birthday. She wants everyone to be able to work on fundraising more for our $60,000 for the 60th birthday of Dawn. And while some might consider that old, she will be competing and will be driving as she does regularly with our team. We're all super excited to learn more, and we have a fantastic crew to experience this boat for the first time.
And now, back to the show.
It's very interesting. I think we've got about 11 minutes left. I noticed if we can turn to page 3, the chip page and the video page, I noticed from one of the news feeds in the last day or two, ASML being pretty substantially criticized by our Commerce Department or whoever looks after it for sending equipment into China. Did I, I'm scanning this stuff. Did I misinterpret that, Mike, or what's going on there?
I didn't hear that particular story, but yes, ASML is incredibly dependent on China. They've been mostly playing along with the sanctions, although only when it came to IP that was related to the U.S. Jason, I don't know if you have any additional insight, but when we sold our position, it was centered around the fact that in order to hit their growth targets, they were going to have to sell a lot more DUV machines into China, and it's becoming increasingly scrutinized. So we'll kind of see where that goes, but it's certainly an issue.
Yeah, and so far they have been doing that. And the DUV machines are their bread and butter. They make the run-of-the-mill semiconductors. the EUV machines are what are used to make these GPUs running AI and to make the advanced chips in smartphones. So I don't know what instigated the chatter that there should be additional sanctions on the technology allowed to sell into China, but if it impacts their DUV business, that has a significant impact on ASML.
Yeah. The other company cited, I can't remember the name, but it was a Japanese company, which apparently is a competitor of ASML. And, I think it was some part of the U.S. government complaining that they weren't honoring commitments they made or something to that effect.
It's interesting. The more we push back on them, the more they're going to innovate on their own independently. And there's alternatives to ASML's lithography that weren't economically viable when the whole industry made the decision to go to lithography or the advanced versions of it. But China very well could, and the economics are much closer these days.
Right. Anything else on page 3? NVIDIA, AMD, Intel, TSM. Of course, we can't discuss page 3 without mentioning from an interview with Bloomberg, and I haven't listened to the whole interview, or haven't listened to any of the interview, made the point that Taiwan is only 46 miles from China, is 10,000 miles from the U.S. And where's our strategic interest? Not a very diplomatic thing for a presidential candidate to say, but apparently he did say that.
We have formally recognized one China policy for a long time. And then we've also said, or certain people have said, that we're going to support Taiwan in the event of a conflict. It's safe to say that our position on it's relatively ambiguous, and the official policy is that we recognize one China. So I don't know how to interpret that, other than that it is obviously a crucial resource for the rest of the world, and it would be to everyone's interest that Taiwan remains a free trade country. So again, we've talked about Taiwan Semiconductor and the risks there. I mean, they have such a history of built up process expertise when it comes to developing semiconductors. It's not easily translated to a different location. I mean, in the United States, we know that it costs more to run a fab because they can't seem to do it quite as well as they do in Taiwan. So I think China's also had similar issues of trying to do the same thing, but replicating somebody else's process, you're always a step behind. So I guess all that is to say is that Taiwan Semiconductor finds itself in a very powerful yet fragile place in the world.
Page 2, software companies. Jason, Mike, and I have talked about this in our 100-minute morning sessions very early his time, 8:30 my time. Is Snowflake's reputation being diminished by its customers having cyber failures, I guess you'd call it? Or is it more the customer's fault? Or what exactly is going on vis-a-vis Snowflake's?
I think there's blame to share between Snowflake and the customers, certainly. It'd be hard to say that their reputation isn't harmed in some way. All these large-scale hacks are being tied back to data coming out of the Snowflake database. So given that they have a pretty intense competition with Databricks, it's going to probably tip some people to think that they should purchase a Databricks product over Snowflake. I don't see how that wouldn't factor in, in recent memory if you're making that decision now. I think, Snowflake should have done better to mandate that if their customers were putting actual data in, even though it was for experimenting or whatever the case was, live data or real world data went into that database and they didn't secure it properly. So, Snowflake and the customers definitely share blame.
The other similar announcement this week was that Alphabet or Google wants to acquire a cyber startup firm. You'd think with all the antitrust issues that in the US and Europe that these companies wouldn't be able to acquire anything. But Mike, you or Jason familiar at all with this startup that Google is apparently going to go to contract on?
My knowledge of it, and Jason, you can add in here because you might know more, is that it's essentially a cloud security company, and Google Cloud is sort of trails Microsoft and Amazon, so it may be a better solution to at least enhance the requirements of its offering so that when they are going to bid for a Fortune 500 customer, they have more of the things they need in order to win those deals. That said, it's a huge number. Maybe the largest one in Google's history, actually.
Yeah, I was surprised with how large it was for a company that isn't well known. But they sell products to engineers to secure their cloud infrastructure for their software. So even though it's a large business, it really kind of is a feature rather than a product in itself, right? The product is cloud services, and the feature is that your cloud services are secure.
The August 8th investor day or whatever it is where Tesla is going to hold as the robotaxi, part of that's been deferred, as I understand, Jason, to October or something. I guess if they're not ready, they're not ready. But does that mean that August 8th becomes way less of an event for Tesla and its stockholders?
Yeah, certainly. There wasn't much news on why it got delayed, other than they weren't ready. Or
what I saw was there's something to do with the design, the front end design or something is going to be dramatically different.
Like the physical appearance?
Yeah, it was a tweet that Elon Musk put out. So I guess we'll see.
This would be the front end design of the Model 2?
Of this robotaxi, yeah, which we believe is on the same platform as the Model 2.
Right.
A little late in the game to make large changes.
Right. Well, Musk, we take him at his word, abhors bureaucracy. So I guess deciding to postpone things 3 or 4 weeks ahead shows at least he's not a prisoner of bureaucracy. Any other news on page 1? Apple, Amazon, Alphabet, Microsoft, and Tesla.
There was a carbon credit offset deal with Microsoft and Occidental. That was sort of interesting if you follow Occidental, because they have this big carbon capture project and doing a deal with a Fortune 500 company. This kind of ties back to what Hunt had mentioned, I think it was last week or the week before, about different cloud providers looking for different ways to power their data centers with clean solutions.
Yeah, I think Google was the first one I saw giving up this idea that buying credits from people planting forests in South America weren't really carbon offsets. And I think the others followed. I think I remember seeing Microsoft following. And what they're admitting to is that their data center electricity usage is going to increase their carbon footprint, and that these offsets by buying, credits for generated in some rainforest someplace weren't really credits. And all that's good. Microsoft has also made a commitment to small nuclear devices, which I guess would be inside the fence on these data centers. Small nuclear devices are very hard to do. There are a couple of public companies out there trying to do it, and I don't want to get into any names because I think they're candidates to avoid from an investment point of view, but it's amazing how long it takes to get this through the regulatory process in the U.S. And interestingly enough, these public companies are not making that much more progress overseas, where presumably there's less extensive regulation. It's a real puzzle for these data centers. They can commit to buy from a solar facility or from wind facility, but you can't necessarily get the power from there to where your data center is. And where your data center is, you may be using, gas-fired power, coal-fired power. So trying to give an accounting each year of what they're, whether or not they can get CO2 neutral is becoming more of a challenge, but I think more realistic. I never thought these rainforest offsets really, that they're bordering on being, fraudulent. So I think that was a good move by Google. Page 2, in addition to Snowflake, it appears to be the case, not Oracle so much because they are doing cloud, but Salesforce and ServiceNow, if you look at people coping with the advent of AI, seem to be, kind of a step or two behind. We've talked about that on some prior Wednesday, but any other comment on that in terms of software companies getting, well, amongst other things, corporate budgets for IT are only so large, and to the extent that money's being put towards AI, it may be less money to buy services from these software companies. Definitely, AI is a challenge for some of these companies providing services and products and whatnot to corporate or government IT businesses.
I think ServiceNow is one of the stories that is much further along than the rest. They have a product that is used by customer service reps at help desks, that it'll summarize the person's past experiences with the company and also what their current challenge is, and greatly speed up time to resolution of whatever brought them to the help desk in the first place. So that's a value add product that ServiceNow is selling to their customers. And their customers should be able to handle more help desk tickets with less people. So that is a direct case where it's already being sold that is having an impact. I think it's probably one of the furthest along stories.
Good. Well, we promised to unveil another healthcare company this week, but in thinking about it, that seemed too ambitious. So maybe we'll do one a month rather than one a week. But in the meantime, everyone be well and stay healthy, and we'll be on again in a week's time. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.